Success is a game of choice where you control the odds by your enthusiasm, persistence, and drive. Each and every day, my friends, we ask you to give 10 to 15 minutes. Devote that time to honing your skills. And before you know it, you will be more and more accurately trading, understanding what you are doing, and enjoying the hell out of this. Like I do every day, I come to you for free each and every day, sharing with you what's going on in the market, our market tips, and all the fun things that we do. I will have at the end of the program today a training video for you on fractional shares, what you do when you think you've gotten good with paper trading, and how you can start converting over to using a little bit of real money where your losses are minor if you don't know what you're doing. And you learn by doing, but with small incremental dollar amounts that don't sting you and turn you off and make you quit. Because people who start with real money too soon are quickly done. Let's jump into these charts. We see stocks and Bitcoin are down, bonds and gold are up. Let's look at the S&P 500. We can see lots of volatility in the morning on Tuesday. And rolling over, well, lots of volatility in the morning. We see a red down candle in the afternoon. Things popped to a low of 667.67. And in the afternoon, where did we get to? 667.81. And again, those of you who pay attention to the market, you know the highs and lows are typically reached in the morning. It'll range back and forth. But again, it ended up down 0.37%. Lots of volume in the morning, volume slacking off in the afternoon. First day of the latest two-day candle, we see it's about halfway toward average. This red volume means that it opened lower than the prior close. You can see a little bitty green candle there. As we look at the candle for the week, we can see last week the high was 672.68. The high so far this week, 672.99. So we have gone a little bit higher during the course of the first 2 days. We are still long the market, and we will continue to watch and continue to stay in this market until it starts to devolve. The trend is our friend until the end. When it what? When it bends. And that will happen at some point. It always does. It always has. It always will. The inflation that we have been encountering over the last many, many months has, of course, been driving this market up. It's been driving your home valuation up. It's also been driving your groceries up and the cost of everything you buy. It's called inflation. It's called printing more money backed by nothing, which means that real things, just by virtue of the fact that you have more dollars made up and put in the system, real things become worth more. That's a really simple but very true economic lesson. It didn't cost you anything, and don't forget it. What do we see going on with the NASDAQ 100 pulling back 0.53%? Again, like the S&P, lots of ranging in the morning, lots of indecision, a doji, a red doji, and then a red down candle in the afternoon with, just like with the S&P, NASDAQ, lowered volume in the afternoon, decent volume on the 2-day. And of course, as we look at the week, we have reached a higher high. We are also still long on the NASDAQ, but we are planning for the day when we aren't long anymore. We'll ride this gravy train as long as we can, and then when it rolls over, we will either pull out, let it drop, and then buy back in, or we will ride it down with the likes of, SH, which is the inverse for the S&P 500 that has been going down the whole time the S&P has been going up, or PSQ, which is a single inverse of the NASDAQ 100. So we'll continue to plan. We'll continue to ride the gravy train as long as it lasts, and then have options. What do we see going on with 20-year U.S. government bonds? They are up for the day, 0.58%. Not much of a trend line here, not much to be able to write home about. We'll continue to watch as things progress and as we see them progress. But again, it is not much going on there. So we'll wait for bonds to sort themselves out And when they do, we will be looking to trade them. What do we see going on with gold? The precious metal continues to shine, no pun intended, or maybe so. And of course, we've been riding this gold train since we saw things move around and over, starting back in late August through September and on into October, up 0.52%. Lots of volume in the morning. See where it slacks off in the afternoon. You can see some patterns here of that happening based upon the gold markets. And again, we saw where things bumped up in the morning and may have shaved a little bit off in the afternoon, but again, up 0.5% as gold just keeps going. Look how far we are just 2 days in with the volume heading up toward that average volume. We could hit that on Wednesday. And look at the the 2 day already halfway there to average volume, just slamming up. We're long gold. What about Bitcoin? Bitcoin pulling back 3.04% after days of strong up movement. We'll see what happens. Bitcoin down in the morning. Looks like it might be a little bit further down in the afternoon. This latest 2 day candle stunted. We will see how things go as the week progresses. So far, it's a good week as far as the weekly candle goes, getting up to average volume, have a higher, bigger candle. So we will pay attention to this precipitous decline of 3%. But of course, we've had 3% after 3% after 3%. We've had just high percentages of gains over the last several days since the half-day candle started taking off on Monday morning, the 29th. The only real stall we had was that second day Tuesday, the 30th of September. And then until today, things just hammering up. So we are still long on Bitcoin, but we are paying attention to that pullback, see if it's brief or not. That's where we are, my friends. Thank you so much for being with us. We always love to hear from you. If you have questions, problems, concerns, don't hesitate to reach out to us, cw@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth.